Good evening, everybody. It's TK, ReadySetFutures.com, 22nd of November 2016, with your daily market wrap-up for today, the 22nd of September 2016. We're going to start taking a look at our action on the ES. Here you see this is a 1200 tick chart of the ES. Nothing special about it. What you see here, I've got plotted the volume profile on the day, and as I put this frame, this time frame, tick frame, whatever you want to call it, up, so just so you can see the choppiness of today. You know, Federal Reserve came out yesterday. We saw just a manic rally. And today was the aftermath. Really kind of a unknown direction yet on this market. Me personally, I had a short order up there at 2173. And I only zoom out and I can show you exactly why. In fact, I got to go a little further. Pull up maybe this 5,000 volume chart. No, it's not going to cut it either. 2,500. Yeah. There it is. Let's see if we can't. And maybe even there. That's what I wanted to show you guys. So here you have post-Brexit volume profile. This big guy, I'll move this down out of your way so you can see the high volume nodes over here on the left. Bottom and top. Red lines here and here, that represents our value area boundaries, and then our green line is our volume point of control. I wanted to short off of this volume point of control today. It came to within literally one tick of me and then reversed over. So that was my trade idea for today. Didn't get in, unfortunately, but that's how things go sometimes in this game. We're going to just break it out to the daily chart so you guys can see just the heavy rally coming up out of Brexit, and here out of the Federal Reserve. We talked earlier today about the lower value area boundary being some key resistance, and it held through the Federal Reserve Bank of Japan uncertainty. And so we're trading up here around 2167, around the volume point of control from our post-Brexit action. So that's the ES on the day. Moving over to crude. Again, another big day up on crude. Not unexpected given the Fed essentially I read some article today, a hawkish pause. I don't know, that sounds like BS to me. But in any event, crude up on the day, down a little further in the overnight. If you'd like, we can dive in here a bit. Go down to the 1200 tick. That's the overnight. And this is, let me take that off for you guys. But if we look today, essentially this was today's action. Again, a lot of choppiness today. Again, not unexpected after we see that kind of a manic rally. We've been talking about crude short, and I still believe we're going to see crude at a lower price. But for the time being, today was a bit of a higher day. Kind of zooming back in. Or out, I should say. You could see we've got a secondary trend line just showing the acceleration that we noted about a week ago, with price then trading back into it. So, we'll see how the crude market continues to play out. I do continue to like this short, though I'm not actively trading it. Moving on to gold. Today saw another big move back up to the volume point of control. We made note this morning that the day of the FOMC announcement, we moved to that volume point of control and traded off lower. And today's action, around the volume point of control, I bet if we look at it, and I haven't yet, but I bet if we did, you'd find that it was pretty choppy today. Yes, up, above, and then below. So not necessarily unexpected from what we've seen in the other markets. Gold, our trading premise so far here on gold is that, is that we're in another consolidation move. This is kind of the third consolidation move that we have seen out of the about the 1080 region. Once gold started its march higher. I've got a trend line drawn just so you guys can see kind of a downward sloping channel. But if my money's on this being a consolidation zone for a subsequent move higher. So don't be surprised to see gold lower before it's higher. Although, as with crude, as with any of these markets, we could just see a takeoff in gold. Lastly, taking a move over to copper. Copper, another big day up. And, this could have been because of, China had a large smelting operation go bankrupt. Was it yesterday or the day before? So that could be part of what pulled the demand higher. Today, seriously, a directional move. Not really much more to say other than copper could head higher. It could head much higher. As you see, here's that downward sloping trend line. So, $2.25. Also, the upper value area boundary for our volume point of control. So not unheard of for a move in copper. It also is in line with its longer term kind of range bound. And by longer term, I mean about a year. Its longer term boundary. Just wanting to pull up the economic calendar for today. As you can see, today was a big day as far as housing information. Tomorrow, just looking through it, not a whole lot. PMI manufacturing index, Atlanta Fed inflation expectations. I don't know if you guys are familiar with the Atlanta Fed GDP kind of forecasting instrument that they have on their website, which is fairly interesting and predictive. But they'll be out tomorrow morning, and then at 1 p.m. again. Again, these are Eastern times, not Pacific times. I'm on the Pacific time. 11 a.m. Pacific. We're going to get the Baker Hughes rig count for oil, which should help us. Let's just kind of click in there and see where we're at. So last week, 506 here in the U.S. Unfortunately, we don't have a bit of a graph to show the trend, but as you know, since about 2014, we've seen declines in this, although recently there's been a slight uptick in the overall ring count. So that's the news for the rest of the week. I'm TK with ReadySetFutures.com. Please hit subscribe. Feel free to leave a message in the comment zone, and I will chat with you guys mañana.